If you weren't able to join us last episode, you have got to go back and listen to that. We were able to talk and walk through the entirety of our save and spend system. It's got 4 steps in it. We talked about step 1, step 2, step 3, and step 4. And again, if you're unfamiliar, you've got to go back and you've got to listen.
Yeah, those stages are really going to help you understand the order in which you're going to be able to climb that financial freedom ladder. And if you get those steps and stages out of order, you might crash and burn when something bad happens.
That's right. So as we go through these podcast episodes for the next year, and so if you're an avid listener, the next few episodes you're going to listen to here, you're going to hear us refer to these stages more than once. So that last episode is a pivotal one. Of course, we will introduce them and reintroduce it as we go. But again, if you do not understand the save and spend system, if you're unfamiliar with our 4 stages, you've got to go back and listen to last week.
Remember, we've got a community coming to you soon with stage 1 and 2 combined into the financial foundations and stage 3 and 4 with the financial freedom. Hope to find you in that group. Each week on our podcast, we now have a section called Nelson's Notes. Nelson being our Nelson Nash, the founder of the infinite banking concept. And what I'm going to do is crack open his book, Becoming Your Own Banker, and go right here to the first page. On page 3, in the second paragraph, here's Nelson's Notes. This book demonstrates that your need for finance during your lifetime is much greater than your need for protection. Solve for this need through this instrument, and you will end up with more life insurance than the companies will issue on you. Most everyone is familiar with the fact that one can borrow from a whole life policy, but because of how little premiums they pay, there's limited access to money to finance major items needed during your lifetime. Yet the need for finance for the typical person is extensive. And that's Nelson's Notes, coming right out of the book, Becoming Your Own Banker, 5th edition. Grab your copy.
All right, Jeremiah, we've got to dive in to explaining the infinite banking concept. We promised it to them on the last episode. We've got to dive in and explain it, and we'll be able to even talk just a little bit more about our personal experience with this as we go through it.
I'm excited. First off, ladies and gentlemen, infinite banking concept, as Nelson Nash, the curator of this idea, would have said, it's a concept.
Yep.
Okay, so that right there, Jonah, is important because I got a call yesterday from a buddy who was talking about his policy, infinite banking policy.
Okay.
Remind us, is that a thing?
Infinite banking policy is going to be a no.
Right.
You buy whole life policies and you implement the infinite banking concept.
So we're not going to step on anybody's toes out there, but we want to make sure you understand the infinite banking concept is a process and the product or platform is a policy. So what we're doing here is we are recapturing the interest that leaves your life, and there's a ton of it.
Yeah.
I also had a guy come into the office yesterday. We both met him, and he understood, look, my biggest need for money over the course of my lifetime is financing.
Yep.
And I was like, I've never heard anybody say that on the very first meeting.
Yeah, so for those of you who are listening, if you're unfamiliar with this, the idea is that you pay interest, you finance everything that you actually purchase. You pay interest. So you can do one of 2 things, because you don't always pay. Some people use cash out there.
Right.
One or 2 things. You either pay to use someone else's money, right? Because they charge you. So you lose money that way. You've got to give up extra. You've got to work more or whatever and give it back to them.
Right.
Or you use your cash, which means you gave up your money and any interest or extra you could have earned.
That one was hard for me. I've said it many times.
Yep.
I was the cash guy from the Dave Ramsey line of thinking. Now, you had some debt when we started. So you understood a little bit more in interest because I had never actually had debt, barely paid any interest on a small 5-figure college loan, and I was well past that by the time we heard of this in late 2015.
Yeah, I think that for the people who do have debt out there, which is a significant amount of Americans, I was with you for a long time. It's a little bit easier even as you get into more advanced thinking to realize that you use debt as leverage. But at the very beginning, kind of understanding the infinite banking concept for those that are cash purchasers, those big people who are going to say, we're going to save, we're going to accumulate, and we're going to use our cash to make purchases, it's really tough to think that you're giving up, you're still financing. even though
Yeah.
you use cash.
That was me. Yeah,
it's
I mean, I
it's
didn't
just
understand
hard.
it. I didn't understand it at all because I thought, how could you possibly, which is maybe why we came up with our entire motif learning structure.
Yep.
How do you save and spend money at the same time?
Yep.
Like, how could you? Because I spent it. So if you are where we were when we started, that's okay. We are glad you are here. And we're going to help you understand the infinite banking concept. Reminder that BYOB, this book right here, if you happen to be looking at us, Becoming Your Own Banker, 5th edition by R. Nelson Nash, says at the bottom, here the subtitle, Unlock the Infinite Banking Concept. This is a workbook, by the way.
Yeah. It's
For
not
a
for
sales
a
tool.
10-hour course.
Yeah, it's a workbook for you.
For a 10-hour course.
So if you go through it and you act like it's a workbook, nobody told me that at the beginning.
Yep.
I read it more like a story. He has stories in there, but that's going to be real helpful. Like, I'm going through it to understand what to do or why this matters.
That's right.
And if you do that, you're going to start to understand a lot of things. Now, one of the things everybody wants to understand out there, and I'm on TikTok a lot, you guys need to catch us at The Banking Bros, is I do explain the product quite a bit.
Yeah, the product can be tricky for a lot of
Yeah.
people. We should explain it for those of you
Yeah.
who are listening on this episode where we kind of introduce this entire concept. But we've got to separate that for those of you who are
Right.
out there paying attention. There is the product and there is the process. The infinite banking concept is using a specific product for a specific process. So you've got to get them both right, or else you'll mess that up.
Right.
Some people are going to say you can do infinite banking with a different product. Wrong, you can't. Specific product, specific process, right?
Yeah.
So you've got to have both. Some people are going to say, oh, infinite banking is like this in this process. Wrong, even though they have the right product, right? You've got to have them both specifically. So when you introduce the product to someone, how do you normally do it? I've got a pretty patented way.
I
You
do.
can go
Yeah,
through
on
it quickly,
TikTok,
but-
once again, I do it my patented way on TikTok. If you've seen me there, I go live a lot for the last several years. Is going to be, we're looking for three things. So we're looking not for a company. We're not looking for a product. We're looking for a type of both of those things. And I make everybody type the word type in the chat. Type. Okay, there are three things. I make them put a 3 up. Everybody got it? Number 1, we're looking for a mutual insurance company. The reason that a mutual insurance company could and should be used in North America, especially in the U.S., Canada may be a little harder, is because a mutual insurance company sells the types of products we want, but they also share the profits with the shareholders, but they don't have any stockholders.
Yep.
So the other type of insurance company is a stock company. 90% of all the companies that you've heard of or know are stock companies. So out of the around 1,000 insurance companies that exist in North America, we've eliminated 90% or so because we're looking for a mutual company. Now, why that's important is because a mutual company, as long as not everybody dies, not all cars crash, and not all buildings burn down, that means they took in more premiums, and their premiums are put to work for the future benefits they have to pay, and they took in too many.
Yep.
Because they're still in business. Hooray, you still have a contract with them. They're not out of business. So what they do is they divide dividends up for the policyholders. Number 2, the policyholders of whole life, capital W, are the ones we're looking for. Whole life insurance is a guaranteed growing and cash flowing asset. So that's where the 3-cup setup comes in, if you guys have seen that from us. And so we've got Cup 1 premiums, they buy Cup 3 death benefits, and they're guaranteed to pay. You're going to live for a long time or a short amount of time, but they don't expire or go away. Cash value happens to be the current value of the product today. You're not dead, so there is equity. That is cash value. That's cup number 2 in the middle. Then that little shot glass shows off dividends. And number 3, we're going to customize the contract. That customization of the contract is also not available with every single company. We're going to customize it with some tricks of the trade and riders on top of your base policy with your base death benefit that allow for early cash value equities that we can use, lose, or abuse. That's how I explain it.
Very good. So for those of you who are paying attention at home, 3 things, right? Got to have a mutually owned insurance company. That's important. You're going to have the type of policy from that mutually owned insurance company that's going to allow you to do the infinite banking concept. So once we have the right product, Jeremiah, we got to move over to process.
Yeah.
And the process is outlined in the book that we have alluded to already in this episode, Becoming Your Own Banker, the 5th edition. There is a link in the show notes of this episode. If you have not gotten that yet, you should purchase one. But here's what happens with the process. The process of becoming your own banker is about borrowing the cash value that's inside that specifically designed whole life policy. And that way you can use it to your benefit. Your benefit really means kind of whatever you'd like to use it to do.
Mm-hmm.
And then there's a second step to the process. Some people forget this. We definitely did for a few years in there, or just weren't making it a priority.
Right.
The second step is that you then need to use income, dollars, maybe that you've already had or that have generated by the money that you just spent in order to repay that policy. That is the infinite banking concept in action, those two steps, taking the loans, repaying those loans, and adding interest or paid up additions according to the book. If you do that, a few things happen. And that is what makes infinite banking so powerful. First and foremost, if you do that, your death benefit grows. Mm-hmm. Meaning you will actually end up, after practicing the infinite banking concept for a few years, with a lot more death benefit than you probably could have qualified for from the insurance company themselves. It says that specifically in this black book.
It's very interesting that happens. And many people don't realize that whole life insurance can go up in value, appreciate, or that death benefit gets bigger. So a lot of people are like, wait, do I already have one of these policies, Jonah? We're like, well, you might have whole life. You might even have it from a mutual insurance company. But what we might say properly structured, what we might say is the right type, you've got to be careful about that because remember, IBC is a process, but the death benefit would be rising too. So keep going.
Second thing that will happen if you practice the infinite banking concept is you will have the ability to borrow more cash value each and every year. And that's a really cool feature.
And that's obvious because of this death benefit thing. Help us understand how they're connected again?
Yeah, just cash value is the equity that you can spend of the death benefit. And so if the first one is true, where your death benefit continues to rise each and every year, and cash value is just equity of that death benefit, then cash value is going to also rise each and every year, which means you can borrow more money, you can have more money, you can do more things, which is amazing, right? That's kind of where we coined our term, the save and spend system, and that's why we want to teach that to you, and that's why we mentioned a little earlier in the episode, right, that our last episode was about that. You should go watch it or go listen to it, whatever you get your podcasts from.
Yep.
You should do that. And what else happens? You get more of a dividend each and every year.
That's
you
true.
Practice the infinite banking concept.
So your dividends are based on how long you've been with the company. Remember, you're part owner when you buy a policy, and then how much you've contributed to that company, which helps them make more money and profits. So the longer you're in and the more money you've put in, premiums are going to contribute to your dividend growth, which is going to just make everything better, faster, stronger, and last longer. Unless you die tomorrow.
And even if you die tomorrow, your family's guaranteed to get the death benefit because you purchased whole life insurance, which does not expire or term out.
Right.
Which is amazing, right? Chatted with a young lady just yesterday or 2 days ago, and one of her goals was to pass on a legacy to her grandchildren. She had her children taken care of, too. Grandchildren, she's got 4. She puts $100 or so into a savings account every month for them, and she discovered the infinite banking concept and said, this will be much better. And I'll just redirect the money. It'll be easy, and let's do that, and let's provide the legacy for them. So that was fun having that conversation. She understood.
Now, when you said she discovered, like she came up with it, or Nelson came up? Oh, I know.
She found it.
She found it. She found it.
Decided
and that's the same thing Nelson said. He named it this, but he found that it was already true.
Yep.
See, whole life insurance is a super old product. It's the first financial product you would have been able to buy in North America. It's that old. I'm talking Abraham Lincoln old. And so this is not a trick. This is not a hack. This is not a fad. We should probably throw that in there for you guys who thinks this is some sort of newfound entanglement, or it is something that is a math hack or something like that. But ladies and gents, you guys are giving up lots of interest and you don't even realize it. And most of you never have that conversation about it. So infinite banking is when you can take over the banking function. The banking function it's happening, and it's in between your earnings and your spending or investing. The banking function is what happens in the middle, and we're going to let you be in control of what happens in the middle. On our next episode, ladies and gentlemen, we're going to get into a big celebration. It's time to celebrate J-Dude, that's me, my first ever infinite banking concept policy. Once again, it's the policy I first bought in March of 2016 to start doing the process of infinite banking.
A decade ago. What a fun episode it's going to be. So you've got to, if you're binge listening, listen to the next one, because we're going to dive in to Jeremiah's oldest policy, 10 years old. So what are some things we're going to tell them next
We're going to show them. We'll talk about the company. We don't mention company names much, but we'll get more in depth into maybe why that was chosen.
Sure.
The base system.
Okay.
The writers on top of it.
I like that.
And the crazy things that I thought and tried to do with it starting in spring of 2016.
I love it.
The fun and games are ready to begin.
I'm ready.
Jonah, we're going all the way back here to 1926, 100 years ago.
Oh, boy.
Okay, it is spring 2026 at this point. We're going back 100 years, an entire century, for a game called back in the day, The Grocery Way.
Okay.
I got 10 items for you, and they are grocery prices from 1926.
Now I gotta tell you before we even start. You remember that game show Supermarket Sweep?
Yeah, 100%.
I watched 3 episodes in the last week,
Oh, you ready for this then?
so I feel good.
Okay. So
Also, the host had the best 90s sweater I've ever seen.
Yeah?
I should take a picture of it.
All right.
It was really good. But
Loved
anyway,
it.
I'm ready.
Love it. Okay, I always wanted to be on that show because I always wanted to do that show in real life. Let people do it in your town.
Yeah.
Like, let some person go through your store.
Their grocery store. Yeah,
Yeah,
I
and
like it.
load up. That'd be so fun.
Okay, I'm guessing the price of the item
Back in the day.
100 years ago?
Yeah,
All right, I'm
okay.
ready.
So we're going to start out here with, we got 10.
Okay.
Do your best here. We got a gallon of milk.
So they're super expensive right now.
What do they cost right now? I don't
Gotta
drink
be
milk.
$4 or $5.
Okay.
Well, we've got the baby. The baby drinks milk.
Yeah.
So we have to buy that. 100 years ago, a gallon of milk, change. No. 75 cents.
56 cents.
That was close.
Okay, so we're going to say you have to be within 5 cents.
Okay. So I gotta get a buzzer on that one.
Yeah, you have to be within 5
56.
cents.
You said
56 cents.
I said 75.
because these are grocery items, so it is
Yeah.
change.
Yeah.
Like everything is basically change. You got to be within 5 cents.
Okay.
Okay, here we go. A loaf of bread. Do you think they had sliced bread back then?
In 26, I don't.
There
know
would have
when
been
sliced
way more loaves
bread
for
came
sure.
out, but
Way
probably
more
way
loaves.
more loaves.
Yeah.
Bread is going to be cheaper than milk. Cheaper than milk. No way. Milk is coming from animals. People are getting that on the farm. Bread is more expensive than milk. Bread is.
Hold on. What are you saying? Your logic right now.
Is
you're
bread
all over
more?
the place.
I think
I don't know.
bread is
What are you
more
saying?
expensive than milk 100
Got it.
years ago. If milk was 56, bread is 60 cents.
Incorrect, sir. Man. Correct answer would have been, according to my infinite research,
Yep.
would have been 9 cents.
Bread is cheaper than milk. Got it?
Okay?
Okay.
A dozen eggs.
This has to be some change.
You just
my
say the time.
logic is.
Oh, we
my
talk
logic
about
is they're
money
on
and
the
finance.
farm.
Okay.
They're getting it. Okay.
A dozen eggs.
So remind
12
me.
eggs. 12 eggs in 1926.
25 cents.
So we're talking roaring 20s.
Yeah, 25 cents.
Not close enough, sir.
Man.
Okay. 36 cents. 36 cents.
All right, I'm on the right track though.
Okay.
I'm trending the right direction, if you will.
All right. A pound of coffee.
Coffee's got to be imported.
You keep saying all these things.
Coffee's got to be imported. $1. A pound of coffee. $1.
1 pound of coffee.
Let me put some change on it.
Put a little honey on it.
$1.05.
47 cents.
Man,
All right. Now we're moving away from the grocery store.
Okay.
You're 0 for 5 at this point.
I am.
And we're going to go into some other common things.
Some of them I felt pretty good on. I'm not within 5 cents, but I felt pretty good about some of the
Okay,
answers,
so
but-
these, I feel like you have to be within 10 cents, okay?
Okay.
10 cents for the next 6.
Okay,
Here we go.
I'm ready.
A movie ticket.
In 1926,
Yes.
which is not probably really movies, it's probably theater. When were theater, like, movie theaters invented? Not in 26. No way.
Wait, what are you talking about?
Like
what are you
sit
saying?
down
Yes,
in
a
the,
movie ticket.
and
Now,
watch,
this would have
and
been
watch it on a screen.
Now this would have
Not in
been
26.
vaudeville. This would have been talkies. You know what I'm saying? Because it's like no sounds.
Hot Cheetos and Takis. What are you
No,
saying?
no, no.
$1, Bob, for a movie ticket.
No. You remember what is the channel? What is the channel that we would have been watching as kids?
In 26?
No.
Oh.
As kids, we would have been watching a channel where
Yep.
you could look in something and you would see a movie and you could like put your face in it and
Watching a channel?
Okay.
I don't even know what you're talking about.
Nickelodeon.
Look in something? Yeah, television. Is that what you're talking
No,
about?
you don't. I can't. You're too young for me. You're too young for me.
$1, Bob.
Movie ticket, 25 cents.
Okay.
All right. A stamp, a postage stamp in 1926.
5 cents.
What do they cost now?
Don't know. Forever stamps, they're more expensive. I bet you they're $1 and some change now. 5 cents.
2 cents.
That's a bucket right there, folks. Within 3 cents. We got one.
Okay.
Stand up, people in the back. We're out here.
All right. A gallon of gasoline for question 7.
1 gallon of gasoline. 15 cents.
21 cents.
Let's go.
All right, 2 in a row. A men's dress shirt.
Oh, I'm not sure.
We're taking it to Sears. We're taking it to Sears.
I feel like I'm not going to have any bearing on this.
When you said all the things that you said about movie ticket and all the things that I said about movie ticket, I'm not saying they were the great like clues for you, but it's like you are too young. You don't know what I was talking about at all.
No.
Talkies.
Unless
Like
you're talking
movies
about-
wouldn't have had sound.
Unless
back
you're
then.
talking about the thing that you...
Yes,
That
a
thing?
Nickelodeon. You
And
put a
then you do like
nickel in
this?
it. Yes, you'd put a nickel
Is
in
that
it.
what it's called?
A Nickelodeon.
I've never
And
heard.
so that's why 100 years later they named a channel a Nickelodeon. That's what you would have.
Oh, I didn't realize
Yeah.
that was what it was called.
Yeah,
I didn't
put a
know
nickel
that.
in the thing. and
Okay,
then-
well, I knew the thing, but I
Okay.
didn't know that's
Yeah.
what it was called. That's crazy. Okay, a men's dress shirt 100 years
1926.
ago.
Yeah.
See, I don't have a bearing, but I'm gonna
What does
go,
it cost now? Well, if you're looking for a nice dress shirt now,
Yeah, $50.
okay.
I mean, minimum. I mean, depends on like a nice dress shirt. Or are you going for a brand? You know what I mean? Like,
Right.
like who knows? But 100 years ago, I'm gonna go with $3.50.
$1.
$1. Man.
Okay, but I'm going to give this one to you, the next one, because a women's dress 100 years ago, $3.50.
Hey.
So I'm just going to give that to you.
All right, I like that.
Okay, now you have one more. I'm not giving you anything on this one. Number 10, last one, is a pair of shoes.
Got to get him from the cobbler himself.
Yeah, you would have gone to a shoeman, a
mhm.
shoemaker, a cobbler. Is it the shoes?
Man, it seems like they charge a little bit. Got to be more than a women's dress, right? Let's go with $5.25.
$4 is what we got here. So I'm sure you
Man.
could have found a pair of shoes for $5.25 somewhere.
Yeah.
All right, $4. So you didn't do so great in the grocery store. It got a little bit better once we got out of the grocery store. All right, how'd you do at home?
All right, folks, thanks so much for listening to today's episode of the Banking Bros podcast. We hope you enjoyed some of the new things that we put together, right?
It is a new format.
Yeah.
We hope you're liking it. Give us feedback, please. If you are being blessed by this information, give us a subscribe. We'd love for you to share this with a friend, and please go on your favorite platform and rate this episode.
Yeah.
Rate us, because that helps us spread the message of the save and spend system to more folks like you.
You know, I think we've got a 5-star rating over on Spotify. I happened to look at it this morning. So we would love that to continue. If you're listening on Spotify or Apple Music, or is it Apple Music, Apple Podcasts? I don't know where it is. Your favorite podcast listening, give us a rating. That would be amazing. So just so you're aware, everything that we chatted about today, or maybe some of the partners that you heard from, the link to get to those places is going to be in the show notes. So if you are on your favorite podcast streaming platform, or if you're on YouTube watching, just get in the description, get in the show notes, and you can find all of the links there. And even you can find links to chat with us.
There we go. Yes, it's all about a call for coaching and a community that we have for you as we teach you to save and spend money at the same time. Ladies and gentlemen, we're here to help you with code cracking cash flow, and we look forward to talking to you soon.
Now tuned to the banking bros. Said we couldn't make it. 3 cup setup. This the life we chose. Gave a lot of game. We never got a lot of things. Bow your head and say the prayer. We taught you how to be the bank.